everybody. Welcome to this webinar organized by Bursa Malaysia and managed by our company LifeChamp. So today we are going to look deeply into overview of Shariah investing. So how are you guys doing today? If you're doing awesome, type awesome in the comment. Yes, thank you so much for all the wonderful responses. So today, instead of becoming a moderator, I will personally conduct this session. All right, so many of you are doing great and awesome. Thanks for always joining our session. Today, we also have almost full house, those of you who are joining online. So today, we are going to look into Shariah investing. Now, whether you are a Muslim investor or you are not a Muslim investor like me, it is essential that we learn about Shariah investing, okay? Because Shariah investing also gives implication to our stock market. Later, we will explore. All right. So today we're going to look into the Shariah screening processes, and then we'll look into the performance of Shariah indices. Also look at the Shariah-compliant securities. And then we'll talk about the world's end-to-end Shariah investing landscape. All right, so disclaimer for today's session is this webinar is also is to promote the Islamic capital market. And then disclaimer is that whatever we share on this webinar, as usual, we do not give any recommendation to buy or sell any companies. So in the event that we cover those companies only for learning purpose. All right, so if you decide to make any investment decision after this webinar, you do it at your own risk. Now, allow me to briefly introduce myself. Of course, I also don't want to blow my own horn, but personally, I'm a financial speaker, trader, and investor with over 10 years of experience trading and investing in local and international stocks, ETF, and currency. I started investing when I was in university in the second year, and in the first year when I studied in university, I learned from my senior about stock investing. Then in the second year, I became the deputy president of a financial club. Then I started to bring my members to go to a lot of investment fairs, learn from all the famous guru. And then personally, I've invested tens of thousands of ringgit learning from different gurus in Malaysia, in Singapore, in Hong Kong, in US. Some of the seafood taught me in the area of stock investing. Some taught me stock trading. Some teach me other asset classes like forex trading, in futures trading, in option trading. When I was 21 years old, I already started selling options in the New York Stock Exchange. So that was a little bit of my background. But essentially, I learned that selling options and doing all the speculative trading is not really for me, because you cannot be a master of all. You cannot master so many things, right? So I choose to focus in one thing, which is in stock investing. All right, you cannot be a jack of all trades. So as a speaker, I speak regularly for Bursa Young Investor Education Seminars, investment banks, and technical charting companies. I also design and conduct stock simulation games and workshops for Bursa Malaysia nationwide. And today, I've trained over 15,000 people in the area of stock investing. I also frequently invited guest speakers for over 20 universities nationwide to teach about investing. And currently, I'm a stock market analyst for Plus FM, which is a Chinese radio station, okay, for finance. It's like BFM in the Chinese version. All right. So in 2015, I got acknowledged by President Obama for my work as a young leader in financial education. So that's a little bit about my background. So today, what we will cover here is we're going to look into an overview of the Islamic capital market. And then we're going to learn the 4 elements that are prohibited in Sharia-compliant investment. Then we're going to understand how Sharia screening works. Then we're going to learn what are the Sharia-compliant instruments on Bursa and how to spot them. Then we're going to know who are the Islamic participating organizations. Then we're going to learn the benefits of end-to-end Sharia investing. So that will be the agenda for today. So we only have 90 minutes time. So let's begin. Now, personally, I'm not a Muslim, as you can tell, all right? So I'm not a Muslim investor. However, the impact of the Sharia compliance status also affect us as a non-Muslim investor, right? So let me talk to you about this company. Now, PandaMaster is one of my favorite companies in the technology sector. And if you don't know, then PandaMaster is a company that supply automated testing equipments to the semiconductors companies, and they also provide factory automation solutions to many of the manufacturers and factory companies. All right. So in November 2019, that morning, I think I received a lot of messages asking me what happened to Penta Master. Then I quickly checked, how come it tumbled so many percent? That was in the early hours of trading from 9 o'clock to 10 o'clock, and then it recovered very, very fast. Okay, so on what happened on 29th of November was that the Penta Master tumbled 20% in the early morning. Can you wake up? Can you imagine, like, wake up in the morning, suddenly see that one of your stocks in your portfolio, okay, tank 20% in the first trading hour, and you were wondering what happened, what happened to this company. Okay, you were searching around for news, and then by the time you figure out the news, the stock price already recover. Okay, you already recover from down 20%, go up to normalized already. Okay, gap down open, then it normalized already by the time you figure out the reason. All right, so what happened was that, and that morning, right, the Shariah Advisory Council by the Securities Commission, they released the Shariah-compliant list, and then Penta Master was unfortunately excluded from the list. So that's why they got tumbled. They tumbled because there are many Shariah-compliant funds that had to sell down their shares. So on that day, they were excluded based on two reasons. Okay, reason number one, their cash over total asset exceed 33%. As of 31st of December 2018. And then they have more than 5% of the interest earned from the cash deposits were not derived from Islamic accounts or Islamic instruments. That's why, based on these two issues, so they were not able to be included again in the Sharia compliant list. So as a result, they had to be excluded from Sharia compliant list, and all the Sharia compliant funds had no choice but to sell down in the early morning. So that's what happened. Then, of course, if you're opportunist, if you have a lot of queue orders waiting, you are a value investor, you don't want to chase high, you want to place your orders much below the market price, and then suddenly you can see that your limit order got triggered, okay, because it suddenly got fulfilled. So that will be a pleasant surprise in the early morning, so when you get to buy Penta Master and hold it up. So, but then at a half year later, we see that on the 29th of May 2019, Penta was included back in the Sharia compliant list by Securities Commission. So you see that on that day, right, Penta Master gained 12% due to the inclusion back into the Sharia compliant status. All right. So when they got excluded, it suddenly gapped down. So when they included, it suddenly gapped up. Why? Because all the Sharia compliant funds now has the mandate, right? Has the mandate to buy into this company, right? Now, in fact, if you study the annual reports deeply, I think if the analysts have been following up closely with the management, they would, if the management keep them informed time to time, they would know that in Malaysia, of course, you want to be included as Sharia compliant. Then, of course, you just address these two issues. Just don't put too much cash in the conventional account, and then don't keep it the interest earned from a cash deposit from Islamic account less than have to be more than 5%. All right. So long that you meet these two criteria, then of course they can go back to the idea. All right. So that's what happened to Penta Master. If you look at the Penta Master annual report 2019, you will see that all the one that have crop the image, all the green box is the Sharia Sharia compliant fund. If you look at the 2019 annual report, right, you see that there are a lot of Sharia compliant funds. That's why they had no choice that they had to sell the company. So later we're going to look into the whole screening process of why a company is classified as Sharia compliant. Now, of course, I've just given you a case study. So now let's go into the overviews, okay, of the Islamic capital market. Now, in Bursa Malaysia, we have Bursa Malaysia literally offers about 4 markets. The first is a security market, whereby I think most of us here are very familiar. So on the security market, we have main market, ace market, and lead market. Main market, of course, is for the big boys. Ace market is for emerging company. Lead market is for those that are in the venture state. All right. So in total, we have 900 over stocks, and then we have 900 over structured warrants, 200 over company warrants, 18 REITs, 20 ETF, one special purpose acquisition company, and also one closed-ended funds. The second big market that we have is a derivative market. Okay, this is run by Bursa Malaysia Derivative, and then under the Bursa Malaysia Derivative, we have 3 areas, which is commodity derivatives, equity derivatives, and financial derivatives. The most active commodity derivative is crude palm oil futures, and then the most active equity derivative is the FKLI, okay, FBN Calcio futures. Then we also have the Islamic market. This is where we're going to focus more today. Okay, out of the 934 listed stocks on Bursa Malaysia, right? 752 are I stock. I stock means Islamic stock. Okay, Sharia compliant stock. So out of the there are about 5 Islamic ETF and 4 Islamic REITs and 4 exchange traded bonds and so good. So this data is as of 28th of February 2021, which is several months ago. Then of course the last market we have is the offshore market, which is the Labuan International Financial Exchange, which we won't cover in depth today. So now let's look into the Sharia market. Okay, so what are the reasons and what are the elements that we should avoid in the Sharia compliant products? Okay, there are 4 main things. Number 1 is riba. Okay, riba means interest or usury. Okay, so this is element that in Sharia investing, right, we should avoid. Okay, in Islamic principle, we would avoid all the riba. Okay, so it means that excess or surplus charge over and above loan, a deferred price or debt. Okay, financial services based on riba interest is prohibited in Sharia investing. Now, in other words, right, almost all the banks, right, are not Sharia compliant. All right, except one, which is Bank Islam. Okay, in the banking industry, right, almost all of them are non-Sharia compliant, and then only Bank Islam is Sharia compliant. So this is something that we need to be aware. The second element that we should avoid is the concept of maisir, okay, which is gambling. So this means the element of exploitation. So whereby it involves the pure games of chance, where one party gains at the expense of the loss to another party, gambling and gaming. So this is what it means. Okay, so of course all the the Jaya Toto la, Magnum la, Genting, these are all non-Sharia compliant because involve gaming and exploitation. So this is something that is prohibited under the Islamic teaching. The third area is gara. So gara is also an element that we should avoid. So gara actually means contractual uncertainty. Okay, so in Islamic principle, right, we should avoid all the uncertainties in contracts regarding contracting parties, subject matter, and price. So we want it to be certain. Okay, so this is for justice and fairness and avoid future dispute among contracting parties. So this is the third element that Shariah investing is prohibited. Then the fourth is other non-permissible activities, means conventional insurance, non-halal food or related products, tobacco-related products or activities, entertainment that contradict to Sharia principles, or share trading in Sharia non-compliant securities. So this is what it means. So all the stock tradings in the non-Sharia compliant are actually not permissible under the Islamic principle. All right. So this is the 4 things that Sharia compliant products should stay away. Riba, maisir, gara, and also other non-permissible activities. So next, we're going to study how are we going to screen Sharia companies. Okay, now the development of the screening methodology is done by the Sharia Advisory Council of the Securities Commission Malaysia, and to determine the Sharia compliance status of a company's traded on Bursa Malaysia. Now this is conducted by the Sharia SAC. And if you have noticed from what had happened to Pentamaster, right, it was reviewed on the 29th November 2019 and also 29th of May 2020, right? So you'll see that the month is in the May and also November. So they got reviewed half yearly basis every May and November. All right. So there are two ways to assess the Sharia compliant status. Okay, number one is the quantitative assessment, which they employ a two-tier quantitative approach, which I will go through later. Then the second way is to go through the qualitative assessment, which is to assess the public perception and the image of the company's activities from the perspective of Islamic teaching. All right. So now, what are the ratio that is allowed, in the Sharia screening methodology? All right. So for activity-based benchmark, so if the company actually carry out some form of activities, business activities that involve a minor element of Sharia non-compliant activities, that is still tolerable. Okay, so it is still acceptable. Okay, so long that it don't exceed the certain figure. Okay, now what are the figures? Number one, if the company has less than 5% of conventional banking, conventional insurance, gambling, liquor and liquors related activities, pork and pork related activities, non-halal food and beverages, Sharia non-compliant entertainment, tobacco and tobacco related activities, interest income from conventional accounts and instruments, and other activities deemed non-compliant according to Sharia. Okay, so this is less than 5%, then it is still acceptable. Now, Panda Master, of course, they have this more than 5%. So, of course, the interest income from the conventional account is more than 5%. So, that's why they are immediately deemed non-Sharia compliant in November 2019. So, they did not fulfill this criteria. Okay. So, if they have some cash in the account that gain less than 5% interest income, that is still okay. All right. Now, of course, if you know that a listed company, some of listed company is a big conglomerate, right? So in the big conglomerate, they have diversified interests, some in energy, some in utility, some in manufacturing, some in consumer products, and so on. So for big companies with a lot of subsidiary and affiliate companies, right? Now, if the affiliate company that is engaged in activity based that is non-Sharia compliant is less than 5%, it is still permissible. All right. Now, for share trading, stockbroking business, rental received from Sharia non-compliant activities and other activities deemed non-compliant according to Sharia principle, that one can be less than 20%. All right. So this is activity-based benchmark. Okay. Now, if you look at company like Genting Malaysia, now the core activities is in gambling. Then, of course, you don't have to guess. It's definitely non-Sharia compliant. All right. Now, the next quantitative assessment is the financial ratio benchmark that we look at. Now, the financial ratio benchmark, right? We look at cash over total asset. Now, the cash will only include cash placed in conventional accounts and instruments, whereby cash placed in Islamic accounts and instruments will be excluded from the calculation. Now, this one is permitted so long that it is less than 33%. Now, of course, if let's say the company got 100 million cash, right? So if the 100 million cash and the total asset is, let's say, if the total asset is a billion, if the total asset is $1 billion, if $1 billion ringgit, and the cash is 100 million ringgit placed in conventional accounts, this is only 10%. So this is permissible. So if let's say the cash is like 400 million, the company asset is only 1 billion, then all the 400 million is inside conventional bank accounts, which is earning interest, then this is immediately non-permissible. All right, so that's why we need to be careful. Now, if the cash is in Islamic account, then it will be excluded from the calculation. Okay, so this is cash over total asset ratio. Then the next is debt over total asset ratio. Of course, debt over total asset means it can only include interest-bearing debts. Okay, the same whereby the Islamic debt sukuk will be excluded from the calculation. So in other words, right, if a company got 1 billion ringgit worth of asset, and there are 200 million interest-bearing debt in a conventional account, then it is still permissible because only 20%. So if the debt is like 400 million in the conventional account, not Islamic loan account, then of course this is they will be classified as Sharia non-compliant because they do not meet the financial ratio benchmark. Now, so far so good. So these two activity benchmark and financial ratio benchmark are the one that compose the quantitative assessment. Okay, whereby the SC will look into what are activities they carry out, is it Sharia compliant or not, and then and the financial ratio. The second assessment is qualitative. The qualitative assessment is where we look at the public perception or maslahah or image of the company activities towards Islam. Now, of course, if the company is often perceived as carrying out activities that is detrimental to the Islamic well-being, then of course SC will fail them in this criteria, Sharia compliant criteria. All right. So now the screening process works like this. Okay. Now stage one, the Sharia Advisory Council from SC will look at the core activity screening. Now, if a company is in the area of like a bank providing interest, interest bearing account, then of course they know that don't have to look into other thing already. Okay, straight away know that it is non-Sharia compliant. Okay, if first step core activities fail, right, then immediately is non-Sharia compliant. For example, BAT, okay, which is a tobacco company, right? So you don't even you just look at the core activities, you know that they are non-Sharia compliant. So if the first step, right, if the group, right, the big company, the core activity looks like Sharia compliant, then they will go to stage two, which is they study the mixed activities, look into all these each subsidiary activities. Okay, are they Sharia compliant? Not. If non-Sharia compliant, is it less than 5% of the total group sales and so on? If it's more than 5% of the allowable ratio, then of course they drop them. Then stage three, they will look at financial ratio. Now, once each stage fails, right? Once you fail in each stage, then you're immediately non-Sharia compliant. Now, stage three is financial ratio. We look at all the cash, cash over total asset, debt over total asset. So if you pass, then still go to stage four, which is qualitative assessment. Look at the image of the company. If the company, is not doing anything that is detrimental to the Islamic well-being, then of course they pass. Okay, then they will be awarded the Sharia compliant status. Okay, they will be classified as Sharia compliant stocks. So long that one stage they do not pass, right? They will be immediately classified as non-Sharia compliant. Okay, now Sharia screening can take place when an advisor submit IPO application or soon after getting a Securities Commission's approval. So it's done every half yearly in late May and late November usually. All right, now let's go through another case study. Just imagine this company called Atap Holdings Berhad. Now say that Atap Holdings Berhad has two subsidiaries. Okay, the first subsidiary is called Atap Plantation. Now by the name suggests, right, if they are plantation company and they plant like palm oil trees, then of course it should be on first glance should be Sharia compliant. Then the second one is operate Atap Games Sdn Berhad. All right. So if they do games, right, that means you know that it is non-Sharia compliant because this is against the principle of Malaysia, which is gambling. Right. So let's say the Atap Group Holdings, Atap Holdings Berhad, which is the group, right, has a total turnover of 15 billion. And then Atap Games contribute 1 billion. And then you know that Plantation contribute 14 billion. So this group 15 billion sales. But the profit before tax for the whole group, right, is 10 billion. For Atap Games alone contribute 0.3 billion. So this one contributes 0.3 billion to the profit before tax, whereby the other one contribute 9.7 billion profit before tax to the whole group. So now let's take a look at the turnover and the profit before tax. Okay, now turnover 1 billion worth of sales come from a non-Sharia permissible activities. So we take the non-Sharia permissible activities divided by the whole group sales. So we take 1 billion divided by 15 billion. So you get 7%, right? Now 7% is more than the allowable benchmark, which is 5%. So is it Sharia compliant? No, right? So now if we look at the next benchmark, which is profit before tax, okay, it's Atap Games, right? Non-Sharia compliant activities bring about 0.3 billion. Okay, divided by total profit before tax, which is 10 billion. So this is a percentage of 3%. So is 3% less than 5%? Yes, right? So this is Sharia compliant. So now my question to you is Atap Holdings, Berhad, Sharia compliant or non-Sharia compliant company? Yes or no? Type yes or no. Okay, let me know in comment. Okay, keep it coming. All right. So I guess many of you have been following so far. I see that from all the easily 50 responses that I received on the screen right now. 95% of you say that it is non-Sharia compliant, whereby only a mere 5% of you say it is Sharia compliant. All right. So the answer is it is non-Sharia compliant. All right. I think that you got the idea already. All right. Because so long that they fail one category, they are immediately classified as non-Sharia compliant. Okay. To be Sharia compliant, you need to pass every single category. All right. So how do we know which stocks is Sharia compliant? So number one, we can look at, you can go to Bursa Malaysia website and just check the Sharia compliant button. Then the companies will show up. Or you can go to a Bursa marketplace. Then there's this, Sharia mode. You just on this Sharia mode. Then you will only search. Your search result only, or whatever come out is all Sharia compliant. All right. Then the third is, of course, every May and November, you refer to the list of Sharia compliant securities issued by the Sharia Advisory Council of Securities Commission. You can easily go to Securities Commission website to download it. Of course, if you are still reading newspaper, then you can refer to all the box symbol in the newspaper when the next to the ticker symbol, right? They will give the box. That means these are Sharia compliant companies. All right. So now I have gone through very briefly on the Sharia screening process and what the elements that we should avoid in the Sharia principles. So let's look into the Sharia compliant products. What are these Sharia compliant products? Now, of course, we have iStock, iIndices, iETF, iREITS, and ETBS. So out of 752 Sharia compliant companies, right? So we have 900 over companies on Bursa Malaysia, and out of which 752 are Sharia compliant. In other words, more than 70% of the stocks in the Bursa Malaysia are Sharia compliant. Now, why is it important to be Sharia compliant? Because you can appeal to a larger investor base. Yes or no? Okay, so that's why it is very important that for a company to have a Sharia compliant status, because many more funds or many more investors can actually invest in your companies. Now, so we know that more than 70% of stocks are Sharia compliant. Then out of the 19 ETF, right, 5 are Sharia compliant. Out of the 18 REITs, right, 4 are Sharia compliant. Out of all the ETBS, right, 100% of the ETBS are Sharia compliant. Okay. Now, if you look at all the Sharia compliant securities, right, you see that we have about 4 indices. So we have FTSE Bursa Malaysia Emas Sharia Index, FTSE Bursa Malaysia Hijrah Sharia Index, FTSE Bursa Malaysia Small Cap Sharia Index, and FTSE Bursa Malaysia Mid Small Cap Sharia Index. So by the name suggests, FTSE Bursa Malaysia Emas Sharia Index, right, tracks all the Sharia compliant companies under the FTSE Bursa Malaysia Emas Index. Okay, FTSE Bursa Malaysia Emas Index comprises the KLCI top 100 and also the small cap. So the Emas Sharia Index keep tracks of the Sharia companies under Sharia compliant company under the Sharia Index. So Hijrah Sharia Index tracks the top 30s, and then small cap Sharia refers to small cap companies that are in the Sharia that are in a small cap index, which are Sharia compliant, and mid as cap index. Sharia index means that all the Sharia compliant companies under mid and small cap index. All right. So we'll go to each one by one, and we'll go through them briefly. I think in the entire Bursa Malaysia series webinar in the year of 2021, we also arranged many specialized sessions into Shariah-compliant REITs, Shariah-compliant ETF, Shariah-compliant exchange traded bonds and sukuk. And then, of course, if you want to learn more detail about them, you can join our subsequent Shariah-compliant products briefing. All right. So let's review let's review two Islamic indices performance. So these are I indices. Now, if you compare FBM Emas Sharia and also FBM Emas Index, right? For the 5-year performance, we will notice that, right? Sharia Index outperforms conventional index. So the orange color is represented by the FBM Emas Sharia, whereby the blue color represent the conventional, okay, which is the FBM Emas. So you notice that for these past 5 years, right, until June this year, Emas Sharia still outperformed for the past 5 years. And if you look at the FBM Hijrah Sharia and compare it against FBM KLCI, now FBM Hijrah, as I mentioned earlier, it tracks the 30 largest Sharia compliant company on Bursa Malaysia, whereby FBM KLCI tracks the top 30 companies on Bursa Malaysia. Now, if you know that FBM KLCI tracks a majority of the financial index, right? I mean, financial companies, right? The banks, the majority of the banks are in the KLCI index. So you see that if the Sharia, you see that Sharia top 30 Sharia companies actually outperform the top 30 companies on Bursa Malaysia. So this is for the past 5-year period. So this is the performance of the I indices. Now let's look into one product, which is I ETF. Now we'll just briefly share with you what are the I ETF. Now I ETF is like it's a Sharia compliant ETF. Now ETF is just like a mix between a mutual fund and the stocks. All right. When you want to buy mutual fund, usually you buy through a unit trust agent, right? Your financial advisor, right? So if you tell a financial advisor that my risk is moderate, okay, I put it for how long period, then your financial advisor will tell you, okay, based on your risk profile and based on your financial goal, which is for retirement savings, and so for this purpose, right, I recommend you to buy this public mutual growth fund, or buy this East Spring fund, okay, or buy this Kenanga fund, okay. These are all the unit trusts. So you buy through unit trust, you buy through financial agents, financial advisor. You buy the unit trust through a financial advisor, right? So when you buy through a financial advisor, right? So you got to pay them their fee, right? So their fee is usually initial sales charge is about 5% to 5.5%. So this is the initial sales charge. Then after that, every year you got to pay the asset management fee and also the annual trustee fee and so on. So easily the first year you may have to pay like 7% to the fund house, and then every year you could incur 2% to pay the custodian fee, asset management fee, and trustee fee and so on. So this is what you need to incur when you want to buy a mutual fund. So why ETF was invented? Because they want to eliminate all the middleman costs. Because they notice that if you buy through, for example, if you put 10,000 right inside a unit trust, right, 7% is already taken out in the first year. So effectively, you are only investing like 9,300 ringgit. Okay, so 7% is already out. So first year, right, if your fund is a balanced fund, right, probably only give you a return of 1 to 2% first year. So that's why ETF was invented to to save all these minimum costs. So how it save all these minimum costs is that they list a fund structure into the stock exchange, and that's called exchange traded fund. So under the exchange traded fund category, you can buy and sell this kind of fund through the stock exchange without going through a middleman like a financial advisor. You straight away, you directly analyze the fund prospectus, and then you decide whether this is something that you want to buy or not. Then you can buy through the stock exchange. The stock exchange only charge you like normal brokerage fees, stamp duty, clearing fee, and this is generally less than 0.5%. So it's very cheap compared to what you need to pay 7% in the first year, right? So this is the intention of the ETF. Then under the ETF category on Bursa Malaysia, I think just now I showed you that we have 19 ETF, and then out of which about 5 are Sharia compliant, which we call it IETF. Now ETF IETF invests in a basket of Shariah-compliant stocks or instruments which track the performance of an index. An IET ETF consists of basket of stocks based on an index which instantly offers broad diversification. If you buy the ETF, right, you probably buy like 100, 200 ringgit, like one lot, 100, 200 ringgit. Then you have an instant diversification to multiple sectors and also depending on the fund objective. All right. So IETF avert the risk involved in owning the stock of a company. An investor can gain exposure to a geographical region, market, industry, or sector, even a specific investment style such as growth or value. So this is the beauty of IETF. All right. So like what I mentioned, similar to trading process in iStock, listed and traded on stock exchange, Shariah-compliant, track performance of an index. Yeah, so it gives you, why invest in IETF? Give you instant diversification so you can reduce your risk in investing in the stock market. Low cost because charge you a very low asset management fee. Trade like a stock, you can buy and sell anytime throughout the trading day, like how you buy and sell stocks from 9 to 5 p.m. Fully transparent because all their prospectus, right, and all the holdings in the constituent stocks, right, are transparent on the issuer website. Okay, so it's fully transparent. Now, if you compare ETF versus unit trust versus shares, right? Now, ETF are usually passive because they track the benchmark of an index. Brokerage fee is less than 1%, management fee is less than 1%, whereby unit trust, right, is active because all the fund managers want to outperform the market, okay? So they are more active. So they're actively buying, actively selling. So sales charge is 3 to 5%, as I mentioned. In fact, Malaysia has one of the world's highest sales charge for the financial advisors, okay? So management fee is 1 to 2% a year. Trading through share is similar to ETF. So investment strategy depends on you, okay? ETF like unit trust give you diversification, whereby shares, no, you got to build a very solid portfolio only can achieve diversification. Then ETF unit trust, ETF is real-time intraday trading, 9 to 5 p.m. Unit trust, right, is different. Unit trust, right, you can only buy it at the end of the day where they calculate the net asset value. Okay, for example, you go to public bank, you say that you want to buy public mutual, right? So you say public mutual, right? You say how much you want to buy. So you say I want to invest 20,000. So you give 20,000 to transfer to the bank's account. Then only at the end of the day they will tell you that, all right, for 20,000, right, you own how many units of this fund. So upon purchase, you don't know how many units because they can only calculate the net asset value at the end of the day. So similarly, when you want to sell a unit trust, you go to the bank, right? Or you ring up your financial advisor, you tell them I want to sell. So you want to sell on that day, right? You won't know at what price you'll be able to sell at. You will only know at what price you're only able to sell at the end of the day where they calculate an NAV. So all the sale and purchase is done at the NAV, net asset value of that single day. Okay. Now, for example, if that day you see that, for example, market crash, right, and you want to sell. If you can sell at 10 o'clock in the morning, then you can maybe prevent all the possible losses from 10 to 5 p.m. Right? If this is a waterfall crash. But if unit trust, you cannot. If in the morning, right, you see that, oh, market crash, right, and they want to sell, maybe there are some issue in the US, okay, maybe there are bond bubble burst, sovereign debt crisis burst, or there are some systematic market risks, okay, Federal Reserve, okay, do quantitative tightening, suddenly market crash intraday and crash very fast. And in the morning, you say, I want to sell, right? You cannot, right? You got to wait until the end of the day. But at the end of the day, right, it could have crashed, let's say 5 to 6%, and then you're not able to cut loss very fast. So that's one of the drawback for trading unit trust. Now, shares, of course, you can do like intraday real time. Okay. Of course, ETF and shares are T+2, Bursa following Bursa settlement, and then unit trust is upfront. You might pay cash upfront. Now, what are some of the ETF? We have in January 2008, right, the My ETF Dow Jones Islamic Market Malaysia Titans 25 is listed. So, and then we have the My ETF MSCI Malaysia Islamic Dividend. So if you like to have a high dividend portfolio of producing stocks, right, you can buy into this My ETF Malaysia Islamic Dividend, which is also Shariah-compliant. Then we also have this Southeast Asia MSCI Southeast Asia Islamic dividend. So this one will also give you exposure to Southeast Asia. Then Trade Plus Sharia Gold Tracker is giving you exposure to the gold commodity. And then Dow Jones US Titans 50 give you the exposure to the US market. All right. So these are the five listed ETF. Of course, I can't go deep into that because of time constraint. But next month, I will be doing the iETFs webinar. If you're interested in ITF, register for our next webinar in iETF. Okay, next month I'll go detail into each of these ETF. Now, so just now we have talked about I indices and talk about iETF. So let's talk about REITs. Okay, now Shariah-compliant real estate investment trust is also available on Bursa Malaysia. So now, before REITs were introduced, an investor may invest in property, stocks, or physical property to get exposure in the real estate. Okay, you want to buy a residential property, buy this shop house, buy this townhouse, buy this terrace. Okay, so you buy directly, or you buy into a developer company. Okay, you buy into SP Setia, you know, buy into EcoWorld property stock. Okay. Now, REITs provide a way to invest in a quality, large-scale commercial real estate without having to buy the properties directly. Okay. Now, REITs are funds or trusts that own and manage income-producing Sharia-compliant commercial estate, such as shopping complexes, hospitals, plantation, industrial properties, and office blocks. REITs also offer a stable income stream and attractive dividend yields. Now, actually, REITs stand for Real Estate Investment Trust, right? What I've written here on top of the headline. So, between the REITs, we also have Islamic REITs, or we call it Sharia-compliant REITs. Okay, so the Sharia-compliant REITs means that all the income from the all the income generated from the real estate, right, are coming from the Sharia compliance manner. Okay, this is a income source is halal. Okay, so this is a Sharia compliant manner of generating the income producing to the generating income to the shareholders in a Sharia compliant manner. So these are assets that invest in these Sharia compliant stocks. Okay, Sharia compliant real estate. Now, so what is a REIT? Now, real estate investment trust, right? It's like if you buy, it's like you buy into a portfolio of properties that give you rental income. Now, for example, if you on Malaysia, we have like Sunway REITs, IGB REITs. So IGB REITs, which owns like Mid Valley and Gardens. Sunway REITs owns quite a lot of things like Sunway Pyramid, Sunway Hotel, and Sunway Tower, Office REITs, and also some of the I believe Sunway Medical Center is also under them. So these are the big REITs. So they own the properties and then they lease the properties out to the tenants and then they get the return. Okay, rental yields. So every month, the professional REITs manager will collect the rental yield from the tenants. So every month, of course, all the income they collected, then they will see how much is the profit. Then at the end of the year, right, they will distribute this profit to you. Now, so what is the benefit of REITs? Now, REITs benefit is that a REIT, right, do not have to pay corporate tax, corporate income tax. Okay, if a condition is met. The condition is they must declare more than 90% of their income to shareholders as dividend. So that's why a lot of tycoon, right, list their property portfolio as REITs. Because why? They can escape all the expensive, because the income tax is how many percent? 24%, right, in Malaysia, right? It's 24%, right? If they do through a REIT structure, so they can avoid this corporate tax. So a REIT do not have to pay corporate tax if they declare more than 90% of their net income to dividend to shareholders in the form of dividends. So that's why we see that there are a lot more REITs being introduced in the market. So a REIT, right, can only, the structure of REITs that the SC require that the REITs cannot have more than 50% of the asset financed by debt. So that's why a lot of REITs, right, have to raise money from the shareholders and then borrow some amount of money from the bank to acquire the asset. So they have to keep the debt over asset ratio less than 50% to be qualified as REIT. So, but every time they collect the rental, they pay back the bank interest, the net income 90% is distributed, more than 90% is distributed to shareholders. So that's why if you are a REIT holder, you will be enjoying a very steady stream of dividend income every single year. Now, among all the REIT, we also have iREIT. No, I think I have gone too fast a bit already. Okay, now, steady income stream, like what I explained to you, okay? Why invest in iREIT? Because steady income stream. It can appreciate in value over long term as companies accumulate new asset, right? Because companies, right, from time to time, they will acquire more and more real estate. As they buy more real estate, sometimes they borrow money. Sometimes they use their cash reserve to acquire the new real estate, be it in the industrial real estate, residential, or office suite, right? Then they lease it out to tenants, then they collect the rental. As property prices rise, then they will also have a valuation gain on their book. So that's why the net asset value also go up. So when net asset value go up, usually the REIT price will also go up. So you trade REITs like how you trade shares, okay? Low barrier to entry. Most iREITs are reasonably priced. You invest within your means. High liquidity, you can easily invest and easily exit. iREITs are highly regulated, of course regulated by SCA, thus offering some measure investment security. iREITs are ideal for new investor, retirees, and middle income earners who want to invest over long term. Now, of course, if you're very lazy to manage your property, because managing property is headache, right? Sometimes your tenants, you got some inconsiderate tenants, like call you 3 o'clock in the morning and tell you fix that, fix this, fix that, right? A lot of problem. So next day you gotta arrange plumber, electrician, go and fix all the house issue. Sometimes the tenants, if you do sublet, wow, a lot more problem because I have a few properties also. Some do sublet, a lot of problem. So I hire a property manager to manage for me. So if you don't want to go through this hassle as a property investor, then you can invest in REITs, because invest in REITs, right, can also avail you to properties in prime location. Okay, for example, affording a property in KLCC is probably very hard, right? Very expensive, right? So it will cost a bomb to your financial. So you can buy through iREIT. So now iREIT give you iREIT is affordable, stable income stream, highly liquid asset, exposure to large scale real estate. Now, if you are dividend holders, you should consider REITs and consider iREITs. All right. So we have about 4 Shariah-compliant real estate investment trust. Number 1 is we have KPJ Healthcare Berhad. Alaka KPJ REIT. So it's launched by KPJ Healthcare Berhad in 2006. So this is the world's first iREIT hospital iREIT. So they acquire properties in hospital, nursing colleges, and commercial. If you've ever been to a KPJ hospital, right? The KPJ hospital rent this hospital building from Alaka REIT. All right, so this is how Alaka REIT generate their rental income. Okay, so number 2, we have Axis REIT. This is quite an exciting REIT, if you ask me. Okay, so Axis REIT is converted into Islamic in 2008. So they acquire office industrial properties. Okay, the property include offices, industrial warehousing, logistic, manufacturing facilities, and hypermarkets. So in this kind of pandemic time, Axis REIT would be least affected. Okay, because they are not retail. They're not in retail. That means if retail means they own like the Gardens, Mid Valley, or Subang Parade, the mines. So this could be one that have could experience a reduced footfall traffic in the shopping mall, so that could affect some of the tenants who want to discontinue their lease. So the third, we have KLCC REIT. So KLCC REIT is the world's first Shariah-compliant staple securities. Okay, so it's also ASEAN's 3rd largest REIT properties. They own offices, retail office properties. Okay, these are like I think Menara Maxis, the Petronas Twin Towers, and also the Surya KLCC, Mandarin Oriental Hotel. I think these are part of the KLCC staple securities. Then 4th, you have Al Salam, launched and listed in September 2015. Their properties include commercial, retail, offices, industrial purposes. So these are the 4 Islamic REIT, Shariah-compliant REITs that are available on Bursa Malaysia. So if you come across the other REITs, right, these are not Shariah-compliant, like Sun REIT, right, IGP REIT, right, these are all non-Shariah-compliant. Okay, so we have talked at length about REITs, IETF, and indices. So now the last part is on ETBS. Now ETBS is is a fixed income debt securities. Okay, also known as bond. So exchange traded bonds and sukuk. But the name suggests, right, it is traded on the exchange and it is bonds and sukuk. It's listed on Bursa Malaysia. Holders are owners of asset, but not owners of company. If you buy into ETBS, you are not a shareholder of the company, but you are just a debtor to the company. Okay, so issued by I think you're a creditor of the company. Okay, issued by the companies or government to raise funds targeted to more conservative investors seeking for diversity. So sukuk is a Shariah-compliant alternative for bond in which the return is not based on interest, but it's based on the value of an asset. Now, in Malaysia, right, if you want to buy through bonds, right, you got to go through over the counter. Okay, you need to have at least $250,000 of cash in your account, in your bank account, before you receive a call from your banker. Okay, so I believe when you have more than $250,000 cash in the bank account, right, then your banker will make a frequent call to you. Hey, sir, you want to buy this bond or not? Okay, so this is where you can qualify to buy bonds issued by the issuer. Okay, so why bond? Because it gives stable income. So if you don't have $250,000 cash in the bank account, you are not. Chances are you won't receive a call, and you are also not qualified. So a person need to have a $250,000 net worth, so that the bank will call you. Now, bonds and sukuks are debt securities, whereby stocks are equity securities. So these are the difference. Let's compare bond and stocks. Stock are ownership in companies, okay? Where bond and sukuk are debt securities. So if you buy into bond and sukuk, right, you're actually owner of a sukuk, and then you do not have rights to the ownership of a company. So of course, if a company go insolvent, of course, the first thing they pay is pay you first. All right? Whereby shareholder is the last to be paid, okay? If you buy stock, you're a shareholder. If you buy bond and sukuk, you will receive a steady flow of interest payments known as coupon, or we call it dividend. Most usually name it as coupon. Whereby if you buy the stock, right, if a company make profit, they would likely to declare dividend to the shareholders. Okay, so this depends on the company dividend policy and also the business performance. For bond and sukuk, right, generally less volatile because the trading activity is generally lesser, and then it's very stable. If you want to safeguard your wealth, right, you could probably consider some bonds in your portfolio because that brings stability to your performance. Then stocks is greatly impacted by the market volatility and forces. Bond and sukuk have a time limit and maturity period, and then stocks generally don't have a maturity period unless the company is delisted. So if you invest in bond and sukuk, you're actually lending money to the issuer. So when a company needs money, they go for debt capital market to go for capital fundraising. So they will issue bonds and for you to subscribe. So if you subscribe to a bond, right, that means you are lending money to the company. So as a result of lending money to the company, you're entitled to receive repayment of the principal upon maturity and the payment of regular coupon throughout the bond structure. Whereby stocks, right, if you buy stock, of course, you know you are part of the small shareholder, minor shareholder of listed companies. Now, the difference between ETBS and bonds, right, exchange-traded bonds and sukuk versus conventional bonds is that ETBS is done through as the stock exchange, okay? So subscription of ETBS through issuing houses of banks, brokers for primary market. And then they are traded over the exchange after listing via investor or traders trading account in secondary market. Whereby for usual conventional bonds, right, you have to go through the over-the-counter via the primary markets. Okay, you could trade over-the-counter via banks after initial issuance. So that's why the bank will assign relationship manager to go after all these big kaki. Okay, so if you have a high net worth to the bank, right, then the bank will call you and offer you some kind of bonds, see if you want to invest or not. So you need to have a $250,000 net worth before you can buy bonds. But but ETBS, right, do not have this requirement. You can you can be like 10, 20,000, you can buy ETBS, or maybe you can buy one lot, which is like a few hundred, then settle. All right, so you don't need to prove that you are at least $250,000 net worth. So ETBS prices are quoted on the exchange, whereby for OTC bond, right, you got to contact the relevant banks for the prices of the bonds and sukuk. So for the ETBS, minimum trading size is 10 units, typically, and with an IPO price of 100, whereby a minimum price of 1,000. So you buy 10 units, that means cost you 1,000. To buy and sell bonds or sukuk via OTC, it will depend on the terms set by the banks. So these are the difference between a conventional bond and an exchange traded bonds and sukuk. So what are some available exchange traded bonds and sukuk? Now, number one, we have this Dana. Actually, out of 4, right? 3 are issued by Dana Infra National Berhad. So what are these 3 used for? The primary purpose of this ETBS is to fund the MRT development in Malaysia. So when there's a need to raise fund by the government to fund the infrastructure, the MRT infrastructure, so they set up a company called Dana Infra National Berhad to issue this exchange traded bonds and sukuk. Okay, so the first bond is 300 million in value, 300 million in value, 10 years tenure, 4% per year. So they give you 4% coupon rate a year. In other words, if you buy at a face value, you invest 10,000, right? Every year you can take back 400. Okay, every year you take back 400. By the end of the 10 year, you take back 10,000 your principal. For the next one is they offer 100 million. So the total value is 100 million. It's a 15 years tenure. Okay, 15 years tenure, of course, you know that a longer dated bond, right? By right should have a higher interest, right? So yeah, the yield is 4.58%. Okay, so every year give you 4.58. In other words, if you invest 10,000 every year, you take back 458 ringgit in terms of the passive income. The third is Dana infrastructure, the Dana Infra National Berhad third ETBS. Stock code is 0400GC. It's a 7 years tenure, 100 million, 4.23% per annum. The fourth is a bit unique. The fourth is issued by Ihsan Sukuk Berhad. I think it's part of the Khazanah group. So Khazanah issued this bond to fund a social cause, which is to fund the development of schools. Okay, so this is for social cost of the champion, social cost to fund school. So it's 5 million only, 7 years, each year pay 4.6%. So if you can see, the exchange traded funds, exchange traded bonds and sukuk, the share prices actually is pretty flat. But then the yield is generally 4%. Right, so this is exchange traded bonds and sukuk, not greatly affected by the market volatility, whereby you can seek to have a stable return. Okay, I've talked about all the listed Shariah compliant products. So now let me talk about the platform. Okay, this is the end-to-end Shariah investing on Bursa Malaysia I. All right. Now, Bursa Malaysia I is a new platform that was set up recently, not recently, a couple of years back, I believe. So Bursa Malaysia I is an end-to-end Shariah-compliant securities exchange platform. Now, Bursa Malaysia I platform incorporates the full range of exchange-related services, including listing, trading, clearing, settlement, and depository services, which provides investors seeking Shariah-compliant securities with a new landscape whereby invest in Shariah-compliant investment instruments in a Shariah-compliant manner. Now, later I'll illustrate to you what do I mean. You see, before Bursa Malaysia I came about, right? If you are investor, right, you could have opened a conventional account, right? If a conventional account, you trade through a broker, then if the product is Shariah compliant, then it go through this Shariah screening, and then it return back to the conventional way of doing trading, clearing, settlement, and depository. Then they route it back to the financial institutions. All right. So this is a conventional way of trading to buy for the Shariah investors. All right. So if you have a Shariah account, right, you also go through this way, but then you will revert to the conventional way of doing trading, clearing, settlement, and depository. So in other words, right, the product itself is Sharia compliant. That means the stock you buy could be Sharia compliant, but the process is not Sharia compliant. All right. So what happened with the emergence of the Bursa Malaysia I is that now the trading, clearing, settlement, depository are also Sharia compliant. So it allows you to buy a Sharia compliant instrument in a Sharia compliant manner. So if you are a Sharia investor, right, if you open a Sharia trading account, Islamic trading account, you go through this way. Okay, you go through an Islamic broker, you go through a Sharia screening, you go through a Sharia trading, clearing, settlement, and depository services, then you route back to the Islamic financial institutions. So if you're conventional, then I go through this way. Of course, can a conventional account buy Sharia account? Also can. So if you can use your conventional account to buy a Sharia account, but buy the Sharia products, but then it may revert, go through a conventional way of doing the facility. You need to have a Islamic account, Islamic trading account to go through the Islamic trading facilities. Okay, if your account is conventional account, then you will definitely go through the conventional way of trading facilities. All right, so remember. Now here are the 16 Islamic stockbrokers. Okay, now they are Afin Huang, Alliance Investment Bank, M Investment Bank, BNB Securities, CGS CNB Securities, Hong Leong Investment Bank, Inter-Pacific Securities, KF Equities, Kenanga Investment Bank, M Plus, okay, Malacca Securities, Maybank, MIDF, Public Investment Bank, RHB Investment Bank, TS Securities, and UOB Kay Hian Securities. So these 16 stockbrokers offer you not only conventional account but also Islamic account. Okay, so you can, if you are a Muslim investor, you can request to open an Islamic account with them. So if you have Islamic account, right, whatever stocks you see on your trading platforms are only Sharia compliant. If they are non-Sharia compliant, they won't appear in your stockbroking account. Okay, so if you want to be safe, if you only want to buy and invest into a Islamic Sharia compliant securities, then you open a Islamic trading account. Well, for whatever stocks that appear in the trading platform will definitely be Sharia compliant. Whereby if you open a conventional account, then maybe you will not bump into companies that are non-Sharia compliant. Now, what are the benefits of end-to-end Sharia compliant investing? Okay, number one, from product perspective, right, it is free from prohibited elements such as riba, gara, maisir. It has lower risk because due to Sharia screening process filtering out volatile investment instruments. Now, as I've shown you, Sharia indices oftentimes outperform the conventional index. Number three, give a better quality investment products. Number four, Sharia compliant companies are fundamentally strong. Number five is larger investor base for it, right? Like they can reach out to entire population of Malaysia, and also some of our Islamic countries. Okay. Secondly, is from ethics perspective. Okay, it adheres to the religious principles. Give assurance on halal source of income. Services provided by Islamic brokers are end-to-end Sharia compliant. Number four is zakat and enable zakat and wealth distribution. And number fifth is promotes socially responsible investing. Okay, in fact, Bursa Malaysia also had a FTSE for good, FTSE for good index. All right, so well, for all our Muslim friends here, yeah, you can become a Sharia investor. Okay, just call Bursa Malaysia I Islamic broker, register and activate your Bursa Malaysia I account and start investing on Bursa Malaysia I. Right, in fact, Bursa Malaysia I received many achievements, right, since its inception. I often go to the stock exchange because I do deal with the people here at Bursa Malaysia. I always see the awards featuring at the panels. Okay, and much of these awards are actually belong to the Bursa Malaysia I. For example, they won the most innovative global end-to-end Sharia compliant investing platform. I think they are the world's first end-to-end Sharia investing platform in the whole world. Okay, so I mean we are the world benchmark in terms of having a stock exchange that provide full range end-to-end Sharia investing solutions. So Brand Excellence Award, gold medal recipient for most innovative non-food services, best Islamic exchange, first end-to-end Sharia-compliant investment platform. So every year best stock exchange for Islamic listing. Okay, every year they win some awards. So these are some of the awards that I got from their website. All right. So yes, that concludes my session on the overview of Shariah investing. Hope that today you have learned a bit more about Shariah investing. If you have any questions for me, you may ask in the question and answer. You may ask in the question and answer box, and then I will do my best to address them. All right. So let me see if you have any question. Okay, I think Hamin asked me a first question: why having cash over total asset exceed 33% cause them to be excluded from Sharia compliant list? This is the I think I addressed that. This is part of the principle set by rules set by the Securities Commission, Sharia Advisory Council. All right. Shane, which stockbroker is Sharia compliant to trade global stocks? Which broker is Sharia compliant to trade global stocks? I think I cannot answer this question. I think it depends on whether the exchange give a symbol to those stocks that are Sharia compliant. Because like in the US, right, we also don't know which stock are Sharia compliant. Sharia may not be a big thing in the America. So I think you have to refer to your broker, I'm afraid that I cannot answer this. I do not have adequate knowledge to answer this question. Okay, refer to your broker. I actually don't know who Sharia compliant to trade global stocks. Just to understand for those stocks. Okay, let me see. Just to understand further, only for those stock non-Sharia compliant, we know that the fund companies will be prohibited. However, are we allowed to own or trade non-Sharia compliant stock? If yes, you'll become. All right, so Henry asked a question like whether Muslim investor allowed to own and trade non-Sharia compliant stock. Now, of course, that depends on the person. See if they, want to trade or not. So it depends on the person. For example, you know that alcohol is prohibited, right? But of course, I think among us, we could also see some of our friends here who are Muslim who also drink alcohol. So it depends on the person, even though they know they are not permitted to do, but sometimes they also do, so it depends on them. But for some funds who are Sharia compliant, right, are definitely mandated not to invest in non-Sharia compliant securities. So those Sharia fund definitely has to invest in Sharia compliant stocks. So I hope I answered that question. So it depends on the person himself. All right. Would you recommend which ETF to invest? This is an interesting question. Now, personally, I'm not a licensed investment advisor, so I can't recommend. I can't do any recommendation, especially on this public forum. Okay, so it depends on your needs. If you want to invest, for example, you want to get exposure into gold, then of course you buy the Trade Plus Sharia gold index. If you want to buy US, you can consider the US ETF that are listed here. Okay, we have a couple of US listed ETF that are the asset is US assets, and then they're listed on the Bursa Malaysia. You just buy the ETF that are listed here that give you exposure to the US market. Buying locally listed ETF that have exposure to the foreign market will save you the currency spread and also a lot of headache, having the foreign broker account and so on. So yeah, depends on the investment objective. Generally, ETF are should be very stable, even though sometimes you see no volume, right? But no volume doesn't mean no liquidity, because volume and liquidity are two different things. Okay, because ETF are market make. ETF, we have market makers that provide liquidity, so you don't have to worry about volume. How to buy ETF? Is it same as stocks? This is asked by Finzin. Yes, same as stock. You just need to open an account with a stockbroker, then you can buy and sell through the stockbroker. Okay, as similar fee like stock buying and selling stocks. Okay, very low. May I know why is conventional insurance non-permissible under Sharia compliant? This is a question asked by Cecilia. I I'm not Islamic professor, so I can't answer this question. I think it involves some of the Islamic principles. Uh, I think they're against that. So like it's against the principle of like riba. Okay, maybe the funds buy into the have a lot of money in the maybe the funds because insurance have funds, right, the investment link funds and so on. Maybe they invest a lot in the money market funds. So I think conventional which element make it non-permissible? I think it could be like the concept of riba and usury that's against it. I believe that. Of course, I'm not entirely sure. I stand to be corrected. So if somebody can explain that further, then it will be better. So you can figure it out, right? So okay. Now, if you, of course, Takafu insurance are Sharia compliant, okay? Get a Takafu one. FSM1 not in the list. Now, this is Fund Supermart. Fund Supermart is non-exchange traded. These are the unit trusts, okay? Fund Supermart are unit trusts, so you can buy through the Fund Supermart for the unit trust that you want to buy, okay? So it is not publicly traded on the stock exchange. Where can I buy ETBS platform? Yes, you can buy ETBS, right, through the stock exchange. So ETBS is traded on the stock exchange. The story of Penta is interesting, which triggers me to think if I trade on Bursa I, when the asset announced that certain stock lose its Sharia status, would that mean broker would allow me few days to dispose the products? Now it depends on whether it's not broker allows you, it is I believe that when the stock is, if you are trading on Bursa Malaysia I, right, the moment the stock is classified as non-Sharia compliant, it disappears from the platform. I think I'm correct. As of course, I also stand to be corrected. So in other words, right, you might need a conventional account. You might need to open a conventional account, go to conventional account to dispose, dispose the shares. I believe that should be the way. Okay, because it could have disappeared. Okay, wait, some question I don't understand. Let me read that. But can use. All right, I think this is non-relevant. I have conventional account. May I know where to check IETF price and where to buy? You can just remember the stock code. Just let me show you the stock code. If you want to buy IETF, right? Just give me a minute. Okay, just remember the stock code of this IETF. You just search lah. Okay, hang on. Is there any stock code? Yeah, these are the IETF lah. I think it's 08. I think it's 0822 something EA. Okay, I think it's 08 something something EA. So these are the stock codes for the ETF. Just remember all these stock tickers are the IETF. Okay, let me stop sharing and go to the next question. If an ETF having buildings leased out to casino or other like Magnum outlet, would it be considered as non-Sharia, as Sharia compliant? I think no. I think if a REIT having a properties leased out to non-Sharia compliant activity, it should be non-Sharia compliant already. So that's why I think you would never find like KLCC having non-Sharia compliant outlet. I believe so. Is it M Plus platform suitable to buy ETPS? This is by Shark, right? Yes. Okay, you can use M Plus platform to buy ETPS. No, actually, you can use any platform to buy ETPS. Okay, even conventional accounts will allow you to buy Sharia compliant securities. Just that conventional account, the process of it doing the exchange related services such as trading, depository, settlement, non-Sharia compliant. Okay, of course, if you don't mind, then it's okay. If you want a full, pure, 100% Sharia compliant, then you have to use a Islamic trading account. Okay, so it's Islamic trading account like M Plus also offer Islamic trading account. So you can use M Plus Sharia compliant M Plus Islamic account to buy and sell exchange traded bonds and sukuk if you want to do it 100% Sharia compliant manner. If you want to use conventional account to buy ETBS, buy REITs, buy IETF, that is also okay. Just that the trading processes are not Sharia compliant. Hang on, yeah. Continuing for the previous question, if I buy from Sharia exchange, will the Sharia stock go to the same ETF, ECDS? Yes, okay. So the question by B Yin is that if you buy from Bursa Malaysia I, right, will the Sharia stock go to the same CDS? Yes, because every stock broker can only maintain one CDS account with one stockbroker. Okay, whether you have a conventional account and an Islamic account, the CDS account is the same. Okay, so you only have one CDS account with one stockbroker. Now, can you remember a moment where you have two CDS account with one broker? Impossible, right? Now, for example, I have a few CDS account. Each one is with different stockbroker. So you are only allowed to have one CDS account with one stockbroker. Okay. So I addressed that question by being already. Why are warrants Sharia non-compliant? Yeah, of course, warrants are non-Sharia compliant because it is speculative. Now, for example, futures on KLCI is also non-Sharia compliant because why? It's speculative, and then the underlying index is non-Sharia compliant because the FBM KLCI itself is not Sharia compliant because FBM KLCI consists of companies like banks that are non-Sharia compliant. Okay, you understand, right? So that's why warrants are also non-Sharia compliant because it's very speculative, right? You want to use least money to make more return. This is a concept of leverage. And then on that note, it is speculative and then it's against the Islamic principle. Atwa asks, where can I check the IETF and IREIT list and portfolio information? You just remember the IETF names that I mentioned and the IREITs that I mentioned, then you can separately go to the issuer website and find out what are the prospectus. Most ETF are issued by IVCAP, which is now acquired by Kenanga Investment Bank. Kenanga Investment acquired IVF, so IVCAP. So most IETF are issued by IVCAP. Then you can go to the IVCAP website to find out the prospectus about this IETF. One more Islamic ETF, which is Trade Plus Gold Sharia Tracker, that was issued by Afin Huang Asset Management. So you can go to Afin Huang Trade Plus website to find out the Trade Plus Gold ETF, the prospectus. For the IREITs, there are four: Al Salam, Al Laka, KLCC Staple REITs, and also Axis REIT. You can go to their individual website to find out their portfolio, what asset they buy and what property they buy. Hope that I addressed that question. I think someone helped me, Muhammad Fuad helped me to say that conventional insurance is considered Sharia non-compliant mainly due to a Sharia non-compliant investment of its risk fund. Yeah, so I think I partly answered correctly on that question. Okay, thank you so much, Muhammad Fuad, brother. Okay, thank you so much. May I know what is KLCC REITs called in the stock? It is called KLCC Staple Securities, if I'm not mistaken. Okay, KLCC Staple Securities is one of Malaysia's first staple securities. Ahmad Johari asks, my brokers say sometimes there's no volume when I ask him about IETF DJ50. What is your comment? Well, definitely, it's quite true that some IETF have no volume, but as I said earlier, volume and what do you call that? Liquidity are two different things. Okay, when it comes to IETF, right, we have market maker. So not only IETF, almost all ETF have market makers. Okay, all ETF issuers will appoint market makers to provide liquidity in the market. Provide liquidity means to provide you the volume, provide you the bid and ask price, and then with the lots there. So an ETF definitely got market maker who are giving you the liquidity, but just that there are not enough people who buy and sell, so it makes it looks like there's no volume. No volume doesn't mean that there's no liquidity. Okay, but stocks is different. Stocks are different in such a way that we buy through the market supply and demand. Okay, when there are more buyers, then we see that there's the queue is the buy queue is filled with a lot of orders. Then there's more sellers, then you see the sell queues are filled with a lot of orders. So these are the market forces of buyers and sellers. So when they are transacted, then it contributes to volume. So because ETF have a lower participant, so that's why the issuer have to appoint market makers to provide you the bid and the ask. That means when you buy, right, you buy ETF, you actually buy from the market makers who sell to you. If you sell ETF, right, you actually sell to the market makers who buy from you. So there are definitely liquidity in the market, except that sometimes the volume is low because there are just maybe not enough people buying. So not enough people buying does not mean that there's no liquidity. Okay, so it is okay. It is okay that you definitely can sell one. When you buy the ETF, right, you can definitely sell it because there's definitely buy and sell orders in the market at a fair price. Okay. Now, Ridwan helped me with one, which is to say that structured warrants are non-Sharia compliant, but company warrant, if the underlying mother share is Sharia compliant, then its warrant is Sharia compliant. Okay. Now, just now we learned that there are two warrants, right? One is structured warrants, one is company warrant. Now, structured warrants are issued by the financial issuers, okay, financial intermediaries. For example, RHB Bank, CMB Bank, Kenanga, Macquarie, M Investment Bank. So these are the issuer that issue structured warrants, because the intention of structured warrants is for speculative purposes, for financial gains, whereby a company that issue company warrants are actually the intention is not for speculative purpose. Okay, when a company undertake a corporate exercise to issue a company warrant, the intention is to raise capital. So if a company issue company warrants and the company itself is Sharia compliant, then the company warrant is Sharia compliant. Do I make sense? Okay, so a structural warrant is definitely non-Sharia compliant, but company warrant, it depends on the underlying mother share. If the underlying mother share is Sharia compliant, then the warrant are Sharia compliant. So a Sharia compliant a company warrants, the ticker symbol ends with dash W. Okay, WA, WB. So these are all company warrant. Structured call warrants are usually C1, C2, C3, okay, CA, CB, CC. Okay, for the structured put warrants, these are H. So these are the how you can differentiate between structured warrants and company warrants. So thank you, Ridwan, for clarifying this. Since the volume is very low in ETF, will we face problem that we can't sell our ticket? I think just now I answered that question already, so there will not be any issue this. I have funds in mutual funds, right? Can I say bonds are better after listening to you in terms of fees? Well, it depends on your investment objective, Ahmad. Okay, if you are the one who likes stability, then of course bonds is better for you lah. So actually it depends lah. It depends on your needs lah. It's not, you just cannot just consider, cannot just consider the fees only. Okay, you cannot consider the fees only. You have to consider the return. Okay, now of course if you buy and sell mutual funds, right, you'll be very foolish to buy and sell mutual fund in a very short period of time. For example, you buy into this fund, you expect it to make because the fund manager told you that this is an aggressive portfolio. 1 year it make you 12, let's say 12% return a year. Okay, let's say this is a growth fund, it makes you 12% return a year. But if you invest for 6 months, you sell already. You see that they did not achieve 6% half year, right? Because 12% in the whole year, you expect 6% in half year, right? But it doesn't go like this, because the moment you put in the money, it got deduct. The return was already actually reduced on a daily basis, because they need to pay the uh, the financial advisor, because first year you need to pay 5.5%, right? So of course, if you trade mutual funds in a short-term basis, you definitely lose money. So it depends on whether your investment objective. Bonds usually give you very low return, but then it's very stable. It safeguards your asset. So, but if you invest in mutual fund that are more aggressive, then probably over a longer period of time, if their assets perform, then you can get a bigger return. So that's the difference. Okay, so it depends on you. Okay, I think I addressed most of the question already lah. Okay, so of course there are some questions that if I can't address all questions, then is, I apologize for that. Okay. Okay, great. So okay, let me tell you more about the next. Hang on, yeah. Okay, sorry, I meant to paste the next webinar link. Just give me a minute. So let me tell you more about our next webinar. Before I talk about next webinar, let's tell you about Bursa Academy. And then, as usual, I need to tell you about Bursa Academy. Now, Bursa Academy is a one-stop e-learning platform that aims to teach investors about the financial markets. And then on Bursa Academy, we have a lot of Bursa investing articles, Bursa webinars, Bursa recordings, and also Bursa investment coursework that you can do to qualify you to trade ETF and so on, leverage ETF and so on. So you can go to Bursa Academy to find out more about this one-stop e-learning platform to upgrade your knowledge about investing on Bursa Malaysia market. Okay, it contains information about securities market, derivative market, and also Islamic capital market. So our next webinar is happening on next Monday. As the title suggests, you know that this will be conducted in Mandarin. Okay, so the session is on Introduction to Technical Analysis. So the title reads as 技术面分析入门篇. So on 21st of June, we will talk about Introduction to Technical Analysis, where we will look into the chart patterns, candlestick patterns, and what are some steps to go into technical analysis. So if you want to learn this in Mandarin, register in the link that I've just given you. All right. So with that, thank you everybody for joining this webinar brought to you by Bursa Malaysia, and hope that you learn a great deal about how Sharia screening process works and what are some of the Sharia products, and about Bursa Malaysia platform, which provide you full range of trading activities that are Sharia compliant, that allows you to buy Sharia compliant stocks in a Sharia compliant manner. All right. With that, thank you everybody. Have a great rest of the day. Hope to see you in our next webinar. Bye-bye. Okay, thank you for your kind comment. I think some of you are waiting for me to give you the link. Just give me a minute. Okay, I've just given you the link for the next webinar.